So welcome, Sam, Ryan. I know we go back. Sam, we worked together for, what was it, 5 years? Something like that, 5 years ago?
Not that. I don't know.
Getting old. I wish we could call ourselves OG Bitcoiners, but maybe we've been in it since 2017,
Yeah.
roughly.
Yeah, that's
Ryan,
I
what
got
about
in.
you?
Yeah,
17.
2017. Yeah.
So this is our third bear, roughly. And in light of that, where do you think we are in terms of overall the state of adoption for Bitcoin? There's a lot of ways to measure that. There's, is it ETF flows? Is it number of wallets? Are you measuring on-chain transactions? When you look at it, Sam, what do you think is the most telling, and where do you think we are today?
I mean, the short answer is all of it. I like taking a really broad picture and using a ton of different data points to measure it. One of the ones that you didn't mention is I like looking at the hodl waves of just the coins last moved over the last 1 year, 2 year, 3 year, whatever the time frame, because I think that's a sign of people holding it and saving it, which I think is probably one of the more important metrics in terms of how investors are actually using this asset as a long-term savings vehicle. And so it's important to me because I think that's what you want to see. You want to see more coins being held for longer periods of time. That's good for the market. It's good for the people holding Bitcoin because we know that holding through the short-term volatility, you're rewarded. So that's one metric that I like to look at. I like to look at hash rate a lot. I think the hash rate chart, and recently there's been some seasonal dynamics and some large miners are kind of turning to AI. But in general, the hash rate chart is like extremely bullish in terms of Bitcoin's adoption and its security. I could keep going on, but I'll stop there to give Ryan some. Yeah, he can give some talking points.
No, I love looking at hash rate as well. I think people really underestimate the signal coming from miners in particular, and miners as a whole, given that they are, I think, the most bullish people on Bitcoin, right? Like you have to be crazy bullish on Bitcoin to sell some Bitcoin and get some ASICs so you can try and get some more, and go scout out, low cost energy somewhere around the world. I also, given, my background at Lightning Labs, I love to look at the people using Bitcoin as a medium of exchange, and, Lightning adoption generally. I think, obviously store value is more important at this stage of the cycle, but the further we get along in store value progression, the more and more people kind of tip over into minimum exchange users. And so River came out with a report a couple months ago that Lightning is doing like $1 billion a month now in volume. And, that is still pretty small in regards to total global payment volume, where Visa, MasterCard are doing like tens of trillions of dollars a year. But in comparison to where Lightning was when I started at Lightning Labs in 2020, I mean, like that's like 3, 4, 5 orders of magnitude of growth. So, I think Bitcoin is progressing very nicely along its adoption trajectory. I think we're seeing tremendous growth in U.S. capital markets, which is fantastic, in international capital markets as well. But I think we're also seeing tremendous growth, on the long tail in kind of emerging markets users who are, maybe they're borrowing against their Bitcoin, taking loans from Ledin, right? Maybe they're, using it for payments, for remittances, and things like that. So, I'm always bullish on Bitcoin, but in particular, with this price drawdown, if the max price drawdown for this bear market is 60, which knock on wood, we'll see. Like that would be, I think, the most bullish thing for Bitcoin possible. If we only draw down 50%, when we're usually drawing down 80, like it's very exciting news.
I think it's interesting as Bitcoin grows. I mean, you should expect the volatility profile to decline, which is it's what it's been doing.
Yep.
But when you say it like that, people are like, "This is the best bear market." But I remember the bull market being people saying, "This is the worst bull market." But that's just a sign of the volatility is dropping.
Exactly right. That and it's exactly what we've always expected.
Yeah.
But then it is a little sad when you don't get the 300K blow off.
Greedy.
Top.
We're greedy.
Yeah, I know.
I like looking at a couple other things, which is, I mean, we know that the institutional adoption over the last year or two has accelerated very meaningfully. And so obviously you can look at things like ETF inflows and AUM, and it's been incredible. Every single Bitcoin ETF seems to shatter records for each firm that issues it. Morgan Stanley was the recent one. It was the most successful ETF they've ever launched. Brought in $100 million in a bear market in a week. It's incredible. And so I think about that as a sign of investor demand, because a lot of capital is like locked in these institutions, right? These wealth management divisions with the financial advisors, and people just listen to their financial advisors, but those regulatory barriers are now lowered. And when Morgan Stanley has a brand product that their own financial advisors can say, hey, this is how we're going to allocate to Bitcoin, they're more willing to do it now because they're going to make fees on the product. That's just the nature of the beast. And so I look for more products that'll gain Bitcoin exposure. I look at banks who are launching products and services and then offering, say, the ability to borrow against an ETF or the ability to borrow against Bitcoin or building out custody solutions. We're very, very early in that trend. I mean, it's very early. Every single headline is a headline, and Bitcoin X goes crazy about, the community goes crazy about it, and that's where we are, but we're in the very, very early stages of that. But the amount of progress that we've made, oh, here we go.
Hey.
What's up, Quittem? It's been incredible.
All right, guys.
So we named off a ton of different ways to measure adoption. Ryan and I, everything from HODL waves to hash rate, Lightning wallet, payment adoption, institutional adoption. What do you like to see? I'll throw it to you right away, man.
What do I like to see? I would like to see my normie friends reaching out. I think a lot of people are frustrated looking at the previous cycle. Okay, we didn't go where we thought. I don't know about you guys, but I had the lowest, out of all the cycles I've been around, the least amount of personal friends reaching out.
Same.
And I don't know if that's a function of the awareness is here, people already made their decision, or is that maybe a function of the K-shaped economy recovery, where you have S&P at all-time high and consumer sentiment at all-time low. And my thought is, post-COVID inflation, there's just not a lot of investable income for the bottom half of the U.S., and I think that probably makes up a lot of that. And sorry I'm late. I'm going to blame Ivy. I was standing right out there.
Ivy. No, it's
I should be up there.
I want to toss one more in there that I thought of that this blew my mind earlier in the year when a friend pointed this out to me. The IBIT options market is like the fourth most liquid options market like in U.S. capital markets right now. It's like, VOO, SPY, and then something else, and then IBIT, maybe like oil or something like that, and then IBIT, which is nuts because it like started from zero, right? Like very recently, and that's always been something that in Bitcoin's maturation as an asset, like first you have spot markets, then you have futures markets, and then kind of once you have futures, you want to layer on options if you can get deep enough liquidity in the futures markets and spot markets to support it. And the fact that we have that now, and that's kind of the mechanism by which this volatility is being dampened, is through the options market, is huge for Bitcoin's progression. And I think that's another thing that in terms of tapping into additional investor bases, where there's a number of mandated funds and institutions that they don't just want to hold Bitcoin. They want cash flow. They want returns. They want to be able to pay off their pensioners and things like that. Turning Bitcoin into a productive asset via, option strategies and things like that is just a really, really, really big step. And the fact that it's grown as big as it's gotten, as quickly as it's gotten, is definitely a sign that like institutions are here. They're paying attention. They're ready to rock and roll.
Yeah, it's incredible. I didn't know that. Top fourth, you said? It's incredible. The four of us collectively, as well as other Bitcoiners, have been saying for a long time, let's front run the institutions, let's front run the banks. And I think we were right in that sense. But now that they're, here, but we all know they move a little slow. So what does the next couple years look like with institutions now here, but starting to layer in size and tranches over time? What does the adoption curve do in maybe perhaps the next bull? If retail's not here because of liquidity and institutions are leading the pack, what are we looking for signs that Bitcoin is going to rally hard into the future with new products? I know we have Stretch, but just in general, where do we see this market going? Is it a continued volatility suppression and a stair step higher for the next however many years? Or like, what are you guys looking for? Brandon, start with you.
I would turn to the institutional guys on this question, to be honest. My thought here is, are the institutions just signing up for another product to sell, or do they really want exposure themselves? Are they looking at Stretch or MSTR for their own purposes, or are they just selling the next hot thing? And to me, that's the primary thing in my head. The next one is, if we look at what's going on in the Middle East, we're seeing a breakdown of the global order since post-World War II. And I think it'll take a while for the new order to reform, but I don't see a world where Bitcoin's not more useful in a fractured geopolitical order. And you see the BRIC countries, you see the petrodollar continuing to fray. Shout out Lynn Alden for that 2020 article. That's continuing. And in that world, I could see oil traded in Bitcoin. I could see energy generally traded in Bitcoin. And that would probably create some new reserve demand that we don't see today for Bitcoin.
I think one thing additionally that's going to be interesting is, this has been the first cycle as well where Bitcoin and crypto generally was not the like sexiest option for retail, right? AI has like totally sucked all the air out of the balloon. I don't know exactly when that slows down, right? Like I think everything, I use the tools, on a daily basis, hourly basis, basically. I think demand for, next level intelligence is only increasing. At some point though, it will have to slow down a little bit and, capital will look to rotate back to other things. And at some point, investors are going to say, okay, like this is run a little too much. I'm going to kind of, take some of my gains off the table, and what's going to be undervalued, right? It's probably going to be the digital gold that's now being adopted by, the rest of the world and all these institutions. So, I do think that's a relative factor that has to be considered, that it's not just on Bitcoin itself and the institutions to, adopt it, but it's also on kind of like the rest of the market dynamics to kind of cool off, and for Bitcoin to, relatively speaking, be, looked at as an underpriced, undervalued asset.
What about agentic wallets in regards to AI? You hear a lot of talk about Bitcoin is the natural best option for agentic wallets in the future, now and in the future. So where does that tie in, would you say? Would it be in relation to AI, or do you actually think we need a full cooling off for people to come back and rotate back to Bitcoin?
I mean, I vibe coded a website, 402index.io, shameless plug, that tracks kind of all of the different endpoints on the web that are accepting, whether Bitcoin or stable coins or different things like that.
What's it called? What's it called again?
402index.io. It's pretty slick. I did it myself. I'm very proud of it. Has an MCP server too. It's pretty sweet. Yeah. So just point your agent at it and it can start transacting. So I'm tracking this like closely. I'm very interested. I did a lot of work with the L402 protocol when I was at Lightning Labs. I think a ton of people are experimenting with this right now. I think there are definitely use cases that make sense, especially in regards to like, having your agent pay. One specific use case that I really like is like Claude Code as a text model does not have the capability to generate images, right? So if you're using Claude Code as your daily driver, you have to use some other model if you want to make a picture, right? If you want to generate an image. That's like the perfect use case for, okay, Claude Code, like go find an image generating model somewhere. You have a budget of like, 20 cents and make me a picture that's like a logo for my project or something like that. That's like the perfect example of I would want to outsource some task for my agent to go pay somebody else's model to do for me. I don't know how many people want to do that right now, right? I don't know how many people will want to do that in the future, but I do think that there will be more and more examples like that, whereas people are using agents in their daily lives, they're going to want to outsource some task to some service provider somewhere. And the most frictionless way to do it is to just pay, right? And the most frictionless way to just pay is to use an internet native money like Bitcoin. But there's going to be people right now, just candidly, you can look at the site, there's like 1,100 endpoints that are Bitcoin specific, and there's like 34,000 that are stable coins, right? So, there's a revealed preference there. Now, obviously, Coinbase is pushing blah 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 blah. There's all this other stuff, but it's we'll see. It's pretty early.
I sometimes ask all the different AIs. I prompt it and say, "Hey, what money are you going to use?" And I judge them if they say stablecoin instead of Bitcoin. Most of them say Bitcoin, but some of them say stablecoins. But we saw last week when Tether froze, $333 million worth of Tether. These AIs are going to use permissionless, neutral monetary rails where they don't have to ask permission for anybody to use it. And they're going to land on that. And I just believe that. I think it's very, very early, like you said, but that's going to continue. And going back to your earlier question before, it is great that retail front ran the institutions for the first time maybe ever for a new asset class. And if you're still on the fence, you should probably get in soon because the institutions are already building, and you had 17 years. So go read a book and learn why you should maybe allocate to Bitcoin, because time is running out to front run the institutions. And I think you're going to see a completely different, you're already seeing a different market structure and the way Bitcoin behaves. We talked about the volatility, but large institutional investors understand the power of compounding. And so actually what we'll likely see is the Bitcoin price be less volatile, but it's going to be more stable, and that's a good and bad thing. You're not going to see these like large 80% drawdowns where retail is more sentiment driven. They get freaked out. They're on the fear and greed and just go back and forth. Institutional investors typically have a more long time horizon. They understand the power of compounding. They understand positioning in the portfolio and not oversizing it. All these things are likely going to help Bitcoin mature, and it's going to be included in more and more of these institutional portfolios as the risk profile of Bitcoin continues to fall in the minds of these investors, and they start to understand it as, hey, this is actually an asset that can diversify a portfolio, that can hedge against currency debasement and uncertainty and the fraying of the current monetary system, like Quittem was saying over there. And so I think all these things are powerful and good, but I want more retail investors to buy Bitcoin before all of this really accelerates. I mean, it feels like its momentum's really fast right now because we're in the industry, but there's still so much work to be done, and so many institutions are not allocated to this. I'm talking about the pension funds, sovereign wealth funds, endowments. You know, they are all very early. There's some first movers there, but really not at all. And so the retail still has time. And I would suggest getting on that.
Yeah, swan.com/welcome for a 1-hour course with Natalie. Maybe that's a good starting place for a lot of retail, I would say. Brandon, do you want to add?
Yeah, a couple points. Starting with retail, I think retail has a 10x by 2030 ahead of them if they're willing to put their money on the line. And from a humanitarian side, back to, we want retail to front run. If retail is struggling to invest, young people can't buy a house, so they look for alternatives, so they try on a little socialism. Maybe we can avoid that whole disaster scenario by getting them invested and seeing some upside in the future. On the AI side, I'm full Bitcoin as I can possibly be, but what I see coming out of fintech or crypto land or whatever you want to call it, I'm worried that the Circles, Coinbase, Stripe, Visas of the world are going to create very easy agentic payments in their walled gardens. And the average person is not going to use Bitcoin with their agents there in the same way that it's really easy to use Cash App to do stuff, so people do, or Venmo or PayPal, whatever. I do expect the majority of people to use the permissioned agentic payment systems. But we still do need Bitcoin for our agents, because there's going to be times when you don't want to be in this surveillance state making payments. And outside of the US, even more so. And so I'm not sure where that one's going to land. I think if you just looked at technology, Bitcoin's better. But if you look at the state trying to manage us, I see agentic payments having an edge.
Yeah, it's interesting. It brings me to the next question, which was essentially that, but more institutional, which is you're seeing the layer of trust decay. Not everyone wants to use USD. Not everyone wants to use Swan. Stablecoin was the natural selection. A lot of people were going for medium of exchange, but now they're starting to see that has centralization risk and censorship risk. And so for me, obviously the war is a terrible thing. But at the same time, the Strait of Hormuz was saying we're going to settle in Bitcoin. I think that's only the beginning. That's kind of the canary in the mine, in my opinion. So I'd love to hear you guys in terms of where you think we're going to go with the global settlement network. And if inevitably no one's trusting each other at any given time, where does that leave us if you truly want a censorship-resistant, decentralized monetary exchange? To me, the Bitcoin's the only one. You can't use Solana. You can't use any of these stable coins. Let's also not try socialism, to Brandon's point. That's not going to fix the problem. I guess we all understand why people feel that way, but the problem is not socialism. That's not what we should be doing here. We should be adopting a true decentralized network. And so do you think that the global settlement layer is the next obvious tier step for Bitcoin's adoption curve?
I think the thing that, while obviously I'm a Bitcoiner and believe that everybody should be using Bitcoin, it's just really hard to deny the product market fit that fiat-backed stablecoins have. And I think with the Genius Act, if I'm Scott Bessent, the Treasury Secretary, what I'm trying to do is I'm trying to find more marginal buyers of U.S. Treasuries to, help me out with my fiscal position. One way in which you can do that, if, the federal governments all around the world don't really want to play ball and don't want to buy something that they know they're going to get inflated away, is you just route around the governments and go directly to the citizens. And if you get the citizens of, Mexico, Japan, name your international country to use stablecoins instead of their local fiat currency, all of a sudden those stablecoin issuers are buying more treasuries. Those stablecoin issuers don't really have to be convinced or cajoled to buy treasuries. That's their whole game. So I think that's kind of the move there. And then you kind of have to think, well, what has name your international person who's now using treasuries instead of the local fiat? Why do they start holding Bitcoin instead? And I think it's, do they get censored? Do their governments try to stop them from using U.S. stablecoins because it's harming their local fiscal position? And is that why they turn to Bitcoin? I think another thing is, could we actually have all of this stablecoin usage be accretive to Bitcoin by having the stablecoins running on Bitcoin rails? That's what I worked on at Lightning Labs the last year, couple years that I was there, and there should be a lot more coming from some of these newer Bitcoin layer 2s this year, which would help kind of square this circle a little bit and not make it be so competitive. So yeah, I think there's a lot to come on that front, but it's just really hard to deny the revealed preference that most people just really want the dollar, especially internationally.
I didn't expect to talk about stable coins on here, but I just think there's, like my friend Jeff Booth says, there's nothing stable about a stable coin. I don't care what fiat currency it's denominated in. And I think, but we will see a world of hyper-dollarization with stable coins because it'll make access to a better fiat in these regions with terrible fiat currencies. Now, the issue, though, is that there's a term for that. It's called currency substitution. When you have dollars available in, say, Turkey, and the currency's failing, and everyone floods to safety of say, dollars and stable coins, it'll crash the lira more. And so what's going to happen is the government's going to call the U.S. government and be like, hey, you got to tell Circle and Tether, stop this because our currency is going to fail because of these stablecoin adoptions. And that's when Bitcoin's characteristics that we all appreciate is really going to shine of the censorship resistance. So, and I think the one thing about stablecoins, everyone's talking about yield on stablecoins and all these things, and you talked about the Bitcoin rails. We could have U.S. dollar-denominated stablecoins, but now there's a new breed of stablecoins being backed by Stretch, the preferred. So you can strip the volatility to zero and earn 8 to 9% on a preferred equity product that is supported by a Bitcoin balance sheet of 800,000 plus Bitcoin, rather than, say, Tether or Coinbase offering rewards of 3%. And it's backed by, dollars or treasuries, basically, that come with debasement risks. So I think you're going to see this rise of these different types of stable coins, and then ultimately Bitcoin is still going to be the anchor of them. And then I just think that Bitcoin itself in these emerging markets where the currencies are more mismanaged, you are going to see these developments happen where stablecoin's going to get adopted, but then the governments are going to put an end to that pretty quickly when their entire fiscal position can collapse because of it.
How do they stop Circle or Tether how do they stop their people on a $30 Android from downloading an app? Do they put pressure on the U.S. government and try and tell the companies to geofence it?
Yeah.
How does that work?
Absolutely. They're centralized companies. That's the failure, right? What's Tether going to do, or Circle going to do? They're in the United States. What are they going to do if the government comes knocking and says, stop this?
I think Circle will fall in line pretty quick, but I could also see our government saying, we don't care if the lira is going down.
Dollar milkshake.
I agree. I agree, but it's all interconnected, this global economy that we're in. If we see failing economies all around the world and you don't think that's going to come back to the U.S. economy, I think that's just wrong.
Yeah, if the foreign country is buying U.S. treasuries, they could say, hey, turn off Tether in our country or we're going to stop buying treasuries. That would work.
Too.
But if they're not buying treasuries, I don't know. Currently, I don't see our government caring at all.
Yeah, I mean, I think it's a thing where like letting the individuals in Turkey, for example, adopt stablecoins organically gives the federal government leverage, right, over the Turkish government. And maybe that's where this thing that we just saw with the swap lines for UAE, that comes in where it's like, okay, like we'll help you rescue your fiscal position, but like we need a pound of flesh first, and that pound of flesh is like another $100 billion in treasuries or something like that.
Build a military base there or something.
Yeah,
like
or
that.
something like that. Yeah, who knows?
I think it's possible. I think that, but then we're in a world where it really is just the dollar and Bitcoin, which is always kind of what I thought would happen over some timeline.
Yep.
And stablecoins will maybe accelerate that. But I still think then Bitcoin is the only other option of an apolitical, neutral, permissionless monetary rail will still thrive alongside the dollarization of the world, And then you're just trusting the government. Like U.S. government's fiscal position, I think we can all agree, is not that great right now. So, that could change very quickly in terms of how reflexive it is when currencies really collapse. And I'm not saying it's going to happen anytime soon with the dollar. Actually, the opposite of what we're saying. But over a long enough time frame, you still have that debasement risk. And it's I think since 2019, I saw Charlie Bolello say that inflation's average around 4%. That means I'd have to do the math, but I think your purchasing power gets cut in half in like 20-ish years, somewhere around there. I mean, what are we even talking about then?
It's crazy.
But isn't that relative to our position in the U.S.? If you live in Turkey, you're not getting your purchasing power cut in half by switching from liras to dollars, right? Relatively, you're doing okay.
Yeah.
Which I think is where that demand comes from. I'm with you, like, yeah, buy Bitcoin. But if you're in a relative position to win, that's a really easy way to win.
True. That's probably why. I mean, that's why I think we're going to see the stablecoin, U.S. dollar-based stablecoin. I don't know why you would buy like a lira-based stablecoin or a euro-based stablecoin or a yen.
Yeah, we've seen the revealed preference, right? Is like the U.S. dollar stablecoins are like 99% of the market. The other ones do exist, but they're tiny and nobody cares.
Yeah, I don't know why you would. A euro? I think somebody is long. I think, did the ECB say that recently? I think so.
Probably.
I don't know who's going
I'm
to
sure
buy
they
that.
wish that would happen, but yeah.
Yep. I don't know.
Yeah, the euro stablecoin will tax you every time you buy a cheeseburger, and if you
If you go too far from home, use too much gas, I know that's
Yeah.
that's the CBDC world that we've all been fearing for a long
Yeah.
time. So last question I have for the group, but feel free to expand on this, is what are collectively or individually you guys all looking forward to the most? What do you see coming in the next 5 to 10 years? What is the ultimate outcome here on the adoption curve? Is it the store of value and then slowly the medium of exchange adoption curve takes hold, or in international regions where they need it as a medium of exchange presently and it's kind of following a path together? Where do we go from here essentially?
I'm really excited again for Bitcoin to transition from the like big boom bust cycles into something that looks more like a really consistent stair step, 20% CAGR, right? 40% CAGR, something like that. I think that's happening slowly. I think again, like if this kind of dip down to 59 was actually the bottom, that's like the best evidence that we could possibly have that like, we're maturing and we're moving into more of a methodical stair step approach up. I'm excited for that. I'm excited in particular for the spread of Bitcoin as a medium of exchange. I'm also excited. I really like Sam's point about these kind of new Bitcoin-backed, perpetual preferred-backed stablecoins. I do think that has a lot of legs and is very exciting. And in general, the leveraging the organic popularity of stablecoins to benefit the Bitcoin network rather than having those benefits leak to these other crypto systems. I think that's something that I'm excited about. And then also just I'm super excited and haven't seen much talk about the changing dynamics within the mining ecosystem. Right, like several years ago when all the big miners went public, there was a bunch of talk about how like this is big capture risk, that we have all these gigawatt sites in the U.S. that the government can shut down whenever they want. Well, now that they've all kind of pivoted to AI, like where is this new hash rate coming from? right? Like I think there's folks down in Paraguay that are mining on the second biggest dam in the world behind the Three Gorges Dam that I didn't know about until a couple years ago. There's all of these stranded energy sites all around the world where miners are finding now economical means to mine Bitcoin, and I think that that's just a fascinating part of the ecosystem to follow that doesn't get enough press, but is hugely important and the foundation of the Bitcoin network as it is.
It is really, you mentioned the AI data centers, and more nuclear power plants are being brought online or being commissioned. And obviously, it's the densest energy source that we have, and it would be foolish of us to not also use that to mine Bitcoin and create hash rate to go up and solidify the network. So yeah, I totally agree with that.
What I'm excited about, when I think about Bitcoin adoption, I think there tends to be factions in Bitcoin that seem to be fighting each other. The medium exchange crowd, store value crowd, institutional crowd. It's all happening at the same time, and it's all good for Bitcoin. It's all good for Bitcoin adoption. And it's just a matter of what you're passionate about. If somebody is really passionate about self-custody, then educate people on how to do it. Like the BTC sessions is a great example of that. Or build products that make it easier for people to take self-custody. Add value to the industry and the ecosystem if it's something you're passionate about, a specific part of Bitcoin adoption. But it's all happening at once, and I'm super bullish on everything I'm seeing. Like for instance, like Jack Dorsey is driving Bitcoin payments right now in many ways. With the Square stuff, and it's basically default the option right now for a lot of these. Payment or these terminals in the Square terminals. And then you have like Michael Saylor who's saying, hey, I want to bring Bitcoin into the $300 trillion fixed income market. Like that's good for Bitcoin too. And so we haven't mentioned probably the most important metric for adoption is price. And there's a lot of things baked into that price. And so I'm very excited to see all these adoption trends combined together into a greater Bitcoin price over the next 5 years.
Yep, agreed. Brandon?
Yeah, I'm going to bring a little data to this one. So in 2020, I did a survey on Twitter asking, what's your Myers-Briggs personality type? Then I ran the same study in 2025. There's roughly 1,500 submissions. And out of that, to no one's surprise, the Bitcoin group is very divergent from the general population. About 71% of self-reported Bitcoiners who replied to my study, insert a bunch of caveats. 71% of those were the analyst subgroup, which is like INTP, INTJ. These are the big picture thinkers, systems thinkers, forward-looking. These are your early adopter archetypes. And that type of group responds to content or information very differently than the more laggard groups. Right, and the laggard groups, so it's 71% Bitcoin, and it's roughly like 7% of the general population. So we're 10x overrepresented today. And the next group, they're called the sentinels. These are the people who like tradition and things being established, right? Think of the people who wouldn't buy Bitcoin until it's everywhere. Their friendly banker down the street offers the product. And so what I'm excited about is piggybacking off Ryan's comment on a more boring Bitcoin, 20%, 25% CAGR type Bitcoin. Those are the conditions we need for those laggard groups to start appreciating what the asset is. It's not so scary anymore. And they represent a lot of buying power. They don't take a lot of risk, but when they're ready, that will do meaningful numbers. I don't know how much marginal demand that actually is, but on the humanitarian side, we want those people to buy Bitcoin as soon as possible. So let's get a nice, boring Bitcoin and, save our neighbors.
It is interesting too. I love that survey that you did, Brandon. I remember that went pretty viral on Twitter, and I looked into that. It is interesting too when you think about as the boomers' wealth, which we all know they hold most of the wealth in the nation, whether it's retirement accounts, obviously homes. When those start to be handed off to the next generation, whether it be millennials or Gen Z, I'm really interested to see what happens there, because if all the wealth that the boomers have are tied up in more of these traditional assets, what happens when the new cohort maybe has a different Myers-Briggs personality trait right now, do they leg into Bitcoin in size, et cetera? That's pretty interesting to me on top of the global settlement network stuff that we were talking about.
Probably what we actually need there is for Carnival Cruises to turn into a Bitcoin treasury company, because I think the boomers are just spending their wealth on cruises instead of handing it over.
Yeah, yeah, yeah.
Quick caveat on that. So I was fighting with my dad about this. I'm like, Dad, you don't understand. People my generation have a hard go. They get disenfranchised. They look to socialism. He's like, idiots, idiots. And I'm like, Dad, you could pay through college just bouncing at a bar playing football, right? The conditions have changed. Getting to the point of what I'm trying to say here is that the boomers' wealth is actually hyper concentrated in a small group. And so it's not like every boomer passes down a couple $100,000 to their kids. The average boomer household has like $200,000 or $300,000 in savings. And so they have all the wealth, and yet it's hyper concentrated. So I don't expect a massive wealth transformation. But still, that's a lot of money. The money will find a new home, but it's not going to help out the young people as much as people think.
Just the last thing. I just like the Bitcoin is boring comment, because it's kind of what we want in every single way. I mean, when you compare it to the rest of the cryptocurrency industry, there's a lot of hacks, a lot of drama. We want Bitcoin to stay boring, to allow these like other people to feel comfortable allocating, but also in relation to the traditional financial system, which is only becoming more uncertain. Bitcoin is certain. Like, it's such a, if you look at just a block being mined every 10 minutes, it's such a rare thing to have a protocol that's just certain, that you can trust in this world, that trust is eroding for institutions. So Bitcoin just has to keep doing its thing. TikTok next block, as my friend Brady Swenson says. As the traditional financial system, the risk there deteriorates. Bitcoin just has to be there as that life raft that's still available for people, as many people as possible around the world, because we look at the risks elsewhere, and that seems to be getting worse.
Yeah, that's interesting. I came across a Terrence McKenna quote recently. I'm sure, Brandon, you're aware, where he says, "This is what it's like when humanity leaves for the stars." It's kind of like, kind of crazy. Like, people start losing their minds, macroeconomic issues. Bitcoin to me seems like the rails that we're going to actually lead us to stability when the rest of the world is breaking down and trust is breaking down. And so, anyway, I'm looking forward to that future. I feel blessed that we are maybe on that 7% Myers-Briggs category here. And yeah, let's keep Bitcoin boring. Let's keep it the main thing, and we'll go from there.